Good afternoon. Welcome to Options Tender. It is Thursday, April 25, 24. Welcome, everybody. Today's going to be just a little bit different. We have some information. I know that there's a lot of fundamentalists out there. So I have somewhat of a little storyline to help us kind of figure out where the market's going at this point. Now, if you're new here, know that I am a pure technician. Sometimes I'll try to translate some of the moves that from different, markets that can affect the S&P and Bitcoin and tech and stuff like that. And today's going to be one of those. I did this early on. I did this some months ago. And what we're going to talk about is bonds. And really, it's the Treasury rates that we're looking at the screen right now. The bonds can be very influential on the market. So this is the 10-year Treasury rates, TNX, if you want to put that onto your watch list. And the bonds, there's different sets of bonds. The 30-year, 10-year. 10 years is really what we're looking at right now. This is a 10-year. This is exact opposite of the bonds. This is the Treasury. When the bonds go down, Treasury rates go up. Okay, so they have an inverse relationship. Now, if you're new here, go down in that bottom right-hand corner, hit that Options Center logo, and subscribe. And really, what I want to tell you about this situation is we have this large rising bearish wedge, okay? I do think this is going to break down. We're at resistance right now. So essentially, I think our near-term low is in the market. And this is kind of a clue of that because I think that going into important data tomorrow, the PCE, I think that it's going to cause this to drop. Anytime the bond market moves dramatically, it's typically not good for the market because it brings down certain portions of the market, meaning financials. I'm not going to get too far into it, but the banks are affected by massive moves, and tech is inversely affected by massive moves in the bond market. So with that said, so far, what has been happening is when rates drop, the market seems to like it. So that's where I think we're going to get our rally into tomorrow and probably into FOMC on Wednesday. That's all going to make sense to me if and when this happens. Now, what we want to be really worried about is if rates drop dramatically as data comes out. That means that the Fed is going to pivot. That means that we're going into recession. And that means the market is going to fall with rates. So at any point in time when you see rates go down and the market go down, that is when you should really be worried in the overall economic environment and the market. Okay, so that's all I got to say about that. That's our big clue that we may have a higher low in the market. So let's go ahead and go with our more traditional technical analysis. I'll start off with SPY on the weekly time frame. Let's go to the monthly, since I had somebody asking, commenting about the monthly time frame. So on SPY, let's go to the monthly board. Here we are. So we have this large rising wedge here. We didn't quite touch the top. I know that some people's charts, how they have it, it's actually the top, and I believe in analog mode, but we're in log. We couldn't quite go there, but we have in mind that we could make a new high eventually. I think if rates start dropping like we talk about, I'm not sure that those new highs are going to happen, but we just keep that in mind, okay? So, and we do have a pathway that we drop and go back up to just slight new highs there. On the monthly time frame, it's a lot higher highs, but it's we're looking at about 560. And I'll show you on the daily time frame. So if you stick around, what's going to happen is SPY is we're going to go through the monthly time frame down to the 65, and then we're going to check out QQQ, IWM, and the VIX, and kind of map out how we think that what's going to happen in the near term since we have this new information. That's why we do the video so often, because information is constantly fed into so we can kind of interpret where the market goes. All right, so we have this huge bearish engulfing candle. Perhaps let's see. So the month ends on Tuesday, I believe Tuesday the 30th. And so going into Wednesday and FOMC, we might see this nice size rally. And so what I suspect is we see some sort of doji in this monthly time frame. Not necessarily a full out hangman or dragonfly or whatever you want to call it, but some sort of a doji with the wick there. So that's what I suspect is going to happen if we hold the lows of today. So that's going to be very important. I do have puts. I have put protection on at this point in the more near term going into next week. And then I've later dated swings calls. Okay, 2 weeks out. Just so you know how I'm positioned. Okay, let's go to the weekly. Now, ultimately, I think we're going to test. I think this is a dead cat bounce. Okay, and then I think we're ultimately going to test this range here. We have 460 is going to be our major test here in the monthly time frame, and then anywhere in this consolidation area could be a good low for a nice swing bounce. Weekly time frame. Now, for those of you that want to know our long-term outtake, it's really, I suspect, not only are we going to test these lows down here at 450, but I think we're going to go much lower. I'll do a full all-out video for some targets, but I think ultimately, this volume point of control on the weekly time frame would be a good target for us if and when we have a large recession. I think we hit a major top. If we do have one more move to the upside, you notice I have this one as the top here, and if we have one more move to the upside, we're at the top of the channel at 560 or so. Maybe that's a major top, but either way, in either sense, I think it's a major top, and we could go much lower. So just keep that in mind. But we take it step by step in the short term. That's just a possible pathway to where this is a top, and we're looking for a possible 5-wave move down, or a more simple A, B, C correction, maybe towards the middle of 286. That'd be the more conservative play there. Okay, but going back to a little bit closer here, we'll zoom past this. We rejected off the 8 EMA of, we tested that 8 EMA. It appears that we got some rejection off of that 8 EMA, but looking at the weekly time frame, we're kind of getting this, it's an inside candle, but a possible reversal candle, like an inverse hammer. So that's a possible, but either way, it's considered a pause candle. We'll see how the week ends. It could be an all-out larger candle at that. And keep in mind, I have puts on just in case we break down below this 21 moving average. We got our 20 simple moving average. We got a nice bounce off of there. So far we're holding that. That's also, you see the couple of wicks here. This also the bottom of this consolidation area for the weekly time frame. That was resistance, and then held here, support again, 3 weeks in a row. So it's a good spot. Now, you see I formed a channel. The 3 points, possibly 4 if you want to extend it more. So it's a good trend line at the top here. This is not a good trend line at the bottom. It's just kind of in anticipation for later on when and if we get down to these levels, which I do think we will. And we'll possibly test a trend line or channel there, and that could allow for the situation. I don't think it's the case, but this could allow for the situation for one more high, and that being working our way up a channel. Let's move down to the daily time frame. On the daily, I just want to point out before I zoom in there, this is the consolidation area, our breakout zone right here that I think we're going to test in the after we get our bounce, and then perhaps down to more of the bottom of that consolidation zone. So if we get through the 470, it could be choppy, because once you get into those zones, you have a lot of support and resistance, you have a lot of volume, so it could be choppy, but we could ultimately end a little bit lower towards the bottom of that chop. And a good spot would be around that 460 area that we constantly talk about. There's definitely more support, because some people, this dash line, some people are considering this a big giant triangle. I remember thinking about drawing this triangle and thinking that this was a wave, possible wave 4, and also bearish off of it if we reject from it. Price held onto that, if you have that, so that could be a test area as well, back to the triangle. We'll have to see when price gets there. We're getting a little ahead of ourselves, but coming down here, we have, I think, the bottom is in at this point. We came down to the bottom of this consolidation area, so that's now support. We got a bounce off of it, and we're holding tight to some retracements here, and I'll show you on the 65. We're getting this nice hollow red candle that is potentially, I know the day's not over, this potentially a reversal candle. We're underneath the 8 EMA, so we have to be careful, right? So that's why we have puts on, because we're still in trending to the downside. For the bears, we're getting a crossover in the 20. Now, if this low holds, this is going to be a good reference here at the 490, 497 area. I think it's 497.50 or something like that. But that will be a good reference to if we break that low to get out of our swing long trades there, the calls. But ultimately, if this spot holds, we're looking for an A, B, C correction before heading lower. So what's the area? We have some former resistance and support right around, let's call it 509. And we'll make this a zone, because this is chop right here, and also really good support and resistance about the 513. So that's going to be kind of our critical zone. Could it get higher? Yes. Don't want to say that it can't. That's at 517 above that. But our zone where we start to layer in some puts is going to be 509, right where we're testing the 50-day and 20-day moving average. It's simple. It's not unusual. You see, the 50 hasn't even curved down yet. So since we have all this information before it, 50 days before, all heading up. So that, eventually is going to start curving down. That will be bearish. But testing that, it's very usual to spike through above it. So keep that in mind, that we're probably not going to get a rejection right at it, especially at a sideways moving average. Probably spike through and test those breakdown candles at 513. All right. And so for anybody that's new here, we have our expanding ending diagonal. This is our major pathway going into the months, into years, actually. And what we have here is in a blow off top. We have a 5-wave move to end a major top with 3 waves into each. So we'll go through those monthly time frames in a later date, probably during the weekend, where we can set the pathway. I have much larger Elliott wave pictures to show. Okay, so an ABC for 1, ABC for 2. You notice how price starts expanding. This wave's much larger 3, larger 4, larger than 2, and going in the blow off top for 5, all forming this expanding wedge. So that will be good support as well when if and when price gets down to these levels. Nothing's for sure, right? But I do think we test this former high. That's a good resistance support going in through, and that zone, it's a zone. Like I always said, it's always a zone, not just a straight horizontal line. And that former high. So all of these resistances held for a while here, and I think that will cause perhaps some, at least a bounce, and we're looking for that dead cat bounce. And right now that I will start to put in a little bit more curvature in this. It's not a straight line, okay? Got to constantly tell people that it's not a straight line. So what we're looking at right now is more of this. I think the low is in. We're going to bounce up, perhaps retest as far as maybe this 516 is possible. But on the lower time frame, I'll show you a little more specific. So then I think we'll get our bounce down here, and I think this will be a much larger move than this possible A or a 1, wave 2 or a B, wave 3 much more intense, getting down to those levels that we're talking about, including the 200-day, which I think will break through there. And then we'll see if we get a 4, 5, or if that's the start of we're probably not going to be able to tell with this 3-wave. They never make it easy for us. Some people call this a 3-wave move down. Some people can count 5 waves into it. It's all speculation. Elliott wave is speculation. It's just kind of a roadmap identification for us, okay? So I do think this next wave is going to be sharper. We're not going to be able to tell whether this is 1, 2, 3, 4, 5, or an ABC, and then we'll start heading for a bounce and or higher. We'll be looking to see if we start breaking levels. I think we'll get a nice big bounce, but then we'll have to see what kind of levels that we reject off and or start breaking through on the downside. Again, we'll talk. That's why I do these videos often, is, we have this information over and over and over. So we are long. We actually went long on the gap down today because we gapped right into a specific spot. So let's go down to the 65 and start working some of these near-term moves here. We have our Elliott wave picture. I'll do that in a second. Let's look at the traditional technical analysis first. So we have our low. We broke out of this wedge, made a high, and rejected off the channel. This channel was a possibility. If we thought that we have this wave 4, then wave 2 and 4 would make a great target for 5 lower. I'm not sure that's the case now. It still could be. With PCE tomorrow, it's a catalyst. So there, we can't say that it's going to be higher or lower. We just have those clues, right? So we think that if rates drop, the market's going to like it a lot, and it's going to start breaking to the upside. So I'm going to start redrawing these channels. If that's the case, we start breaking over this high. This isn't really a true channel yet. So we don't have anything. This is just if we start going lower, that would be some good lows. So I'll start redrawing these if and when we start getting a new high here. This is going to be a very important level. The 506, you get a new high there. I think price action is going to continue higher. But our point of reference here, and you'll see on the next screen that I put up, this will be our low, our stop. All right, so ultimately we'll be looking to get to, perhaps, we might not even make it there, the gap. We have this 200 moving average on the 65 minute that's starting to curve lower. So that's our zone. Remember I said 513, 509, which if tomorrow we make it directly to 509, watch out. We'll have to add some more protection again. That's at this potential channel here. top, and I'll show you the retracements too. I know that's really quick, but then we have all the way up to 513. And again, we may try to test the gap if it wants to go higher, all the way to possibly 518. Super, super deep retracement, but anything's possible. Have to keep it in mind. But I'm telling you, I'll already be in some puts by that time with call protection. That's kind of my MO, is to hit turns. I like hitting turns, but then protecting my moves in more of a near term. So I'll swing out a few weeks to months, and then protect it with near term options. Let's go over to the Elliott wave. And that's important to know. So, because I'm showing you my eye view of what's happening. And if you don't know that, I trade. So some people are just analysts and just kind of interpret the market. But I trade with my money and what I see. So I'm looking for, now we can adjust this. I think this is a low. If not, then our 5 target is down here. So that's where I have my near-term puts if the market wants to tank, especially going into PCE tomorrow and follow through Monday around this 490 area. Okay. Now we can kind of rework this. And I said that, that's what we would do if we started to see information that we have a bottom in. So it's kind of looking that way. Our clues tell us that we have our bottom. So this was a 1. So now we're looking for the wave 2. A or B. Yes, I do have those there. Just in case you need to know that, both scenarios. Doesn't matter to me. They're both going to really shape out the same way. Now, so that would mean that we have our initial A here, and we're potentially at a B low right into the 62% retracement. Now, Tesla was giving relative strength to tech yesterday, and tech, it kind of evened things out when Google and Meta had their bad, not necessarily bad earnings, but the market reacted bad to it. So that kind of leveled everything out. And now the SPY and QQQ are, and I'll show you, are kind of coordinating again and doing the same thing. So they kind of leveled out. So we have an A, a B into the 62% retracement from the top of A down to B. We held on to the 62% retracement. That's a 1-2 setup. All right. A, B, or 1-2 setup for a bullish move. And now we should see the beginning. And remember, this isn't going to be a straight line. We have to have consolidation between the wave 2. So it's going to be a 5-wave impulse move to the upside into the 50%, which is that 509 area that I was talking about, into the possible 513, 62% retracement, that 200 moving average on the 65 minute, and the extreme move, which just so happens the 786 lines right up with the gap down. So the market's symmetrical, the geometry. So if we really start to hold on to this 62%, or if we just, the market loves whatever is happening with the bonds going into Friday and follow through into Monday, and maybe we get a pause Tuesday that really doesn't do anything because it wants to hear FOMC onto Wednesday. So think about those. That our turnaround Tuesday might just be a pause in the market. But we're looking for this move all the way up to potentially 518. Our golden area would be this 513. If the market breaks down into tomorrow, then we're looking at 490 zone. for a low. Let's go to the Qs. And now it's going to move a little bit quicker, you guys. So the Qs, if we break down tomorrow, you see the lows. We have this area here of confluence, support, gap support, and the uptrend line. But ultimately, we're looking to possibly retest this breakdown area. So we had a potential head and shoulder here. I can actually, let me take one of these support resistance. I'll duplicate this. And we look pretty good about right in that zone. So let's keep in mind 435. I don't think that's going to hold price too much, but you have this bow and arrow. You have a lot of volume right in this area, right where the gap is, about 440, 441. So let's keep those numbers in mind. And for reference, if you're going long here, we close that gap. I can get rid of that. This low would be our stop out at about 418. And the Elliott wave picture, that takes us to the 50% at about 530. I just don't see that really stopping things. It's always an important area to watch out for, but I think more of the 62%. And if we start seeing some of the earnings from tech or any strength from one market to the other, we can start noticing whether maybe SPY only makes it to the 62% retracement, but the Qs make it all the way up to 786. You'll have to kind of watch those simultaneously to see who makes it where first. And that would be testing that gap area right there. So that could be a rejection. Maybe SPY closes its gap, but the Qs reject off the gap. All right, so that it's a real-time kind of thing. But so far, same thing. This is a 1-2 setup. And to the 62% golden ratio. That's perfect. It's a beautiful setup. Let's go over to IWM. Talked about it real quick on, and maybe we'll give you a trade too. I think I went long snow. Yeah, so we'll show snow also. But this is a trade setup as well. We have this falling wedge or channel, whichever way you want to look at it. And we hit the bottom area here. This is a good bottom so far. And then initial move up. And these are zigzags, you guys. These are 5-wave moves, 3-wave correction, and we're looking for another 5-wave move to the upside. That would be a breakout if you break above this channel or wedge top here. I know you can rework it a little bit different, but we're trying to catch a lot of those spikes. And you see that big gap there? Well, we would be looking for our retracements into the 201 would be just minimal. And again, 62, 786. This would be our sweet spot, about 204. That would almost close the gap. Maybe we get up, close the gap. And believe me, you don't have to hit exactly on those lines there, but we get to the 62, maybe spike up, close the gap, and drop from there. But these are zones. It'd be real shallow and bearish if we turned around at the 50%, but maybe we just get a pause there. Okay, this is more likely around the 204 zone. So let's go over to snow and just kind of see what kind of setup we have here. So we went long into a swing into next week on snow. It's real simple. We just have a nice retracement, and we have also indicators that are positive divergence. And we have this falling channel. So with this positive divergence, we have the RSI that gave positive divergence a few times. So this is a long running positive divergence. And of course the MACD You see we're just oscillating around the 0 line. Typically when that's happening, really, we're working this channel waiting for the overall market to give some strength for some of these smaller cap plays to give liftoff, with the tide, the tail, with tailwind, with all the headwinds of the market going down, Snow wasn't able to break this channel. And I do think this is going to be the case. We don't have our breakout yet. So if you want to wait for this breakout, it just so happens to be the 200-day, a simple moving average on the 65-minute coincides with this falling channel. Okay. And then we're in a little bit early. So the slow stow is still heading to the downside. So we don't have our breakout yet. You could wait for that. I like to get in a little bit early, anticipating what the market's going to do. With our reversal signal, we are actually starting to head to the upside. So that's our buy signal here. That's our early buy signal. Could look at a couple things. That's neither here nor there. The daily time frame would be more appropriate to check out the Bollinger Bands. We're down at the bottom, but that's our setup. That's what we want to show there. You have plenty of time, so we're getting this out to you early. I would say over 155 right over this candle, and that zone would give you your breakout, and you have a nice trade set up there for you. All right. 5-wave move to the downside with an ending diagonal. 1, 2, 3, 4, 5. So that's how you'd count it. Elliott wave. 1, 2, 3, 4. 1, 2, 3, 4, 5. So we have a completed structure here potentially as well. All right. Thanks for joining us here at Options Center. Don't forget to like the video. Have a wonderful day. We'll talk to you tomorrow.